do we make of the sell-off in the stock of CrowdStrike? That's the best-of-breed cybersecurity play, one we own for the Chapel Trust. It dropped nearly 6% today after reporting a solid quarter last night, and at one point it was down a lot more than that. First of all, you got to keep in mind that the stock came in hot. CrowdStrike had rallied 64% from the April lows through the close last night. It was priced, I say, for perfection. But the quarter wasn't perfect. They delivered inline sales and decent earnings beat, but the revenue guidance for the next quarter was considered to be a little light. We got to find out about that. So are the sellers overreacting to what seemed like a solid report, or is this just what happens when a stock gets too hot? Let's check in with George Kurtz. He's the founder and CEO of CrowdStrike to find out more. Mr. Kurtz, welcome back to Mad Money.
Great to be here, Jim.
Okay, so, George, we do need to do a little bit of explaining because people were confused. There were 3 downgrades, and everybody else raised their price targets. So you kind of feel like there must be some difference of opinion here. Can you just tell me how, when you did your guidance, which seems to be a bit of a problem, did you see it as being exceeding what you thought, or was it really below what you thought?
Well, I think when you look at Q1 performance, we came in line with our guidance. And part of what we tried to explain is with our CCP program, and those are the programs that we created to help our customers get past the outage.
Right, good.
Right, customer care package. And when we created those, not only for customers, but also for partners. And we created a very robust incentive program for partners, which ultimately was an investment, and we exceeded our expectations. So we called that out in Q1, and that was an $11 million deduction from revenue. It's a contra account. You would think it would be an expense, but the accounting treatment is you actually deduct it from revenue. And then we also demonstrated how that flows through the rest of the year. So we never had a CCP program before, so that was a new line item, and we wanted to make sure that people understood what it was. But I think at the end of the day, you got to look at what was the net new ARR, and that was $194 million, way above street expectations, with free cash flow of $279 million, a record, and of course, 97% retention rates. Customers are staying with CrowdStrike.
All right, now, people need to know this is the annual recurring revenue number. Now, George taught me a long time ago that annual recurring revenue is how to grade companies, and I thought that your annual recurring revenue was one of the best things. But another thing that you've taught me, remaining performance obligations increased 45%. Again, something that I thought was better than what people were looking for.
Yeah, when you look at RPO, that's really going to be a function of Falcon Flex, and this is our innovative licensing model, which allows customers to use all of the Falcon products based upon a commitment. So they commit, the more they use, the quicker they use it, the greater opportunity we have. And you could see the contract duration actually increase. And on average, what we're seeing with Falcon Flex customers is 31 months specific to those contracts. So you're seeing these performance obligations that are to come, and ultimately it's a great indicator for the health of the business.
All right, another indicator that we need, of course, we're coming to annualize a glitch that is not a hack, but a glitch that brought down a lot of terminals. And I'm anxious to know that when you did your, what I guess could be a charm offensive, so to speak, when you visited 130 customers, how many of the customers have said, you know what, I love you, George, but I gotta go away from you?
Oh, not many. I mean, you could see that, Jim, based upon the 97% retention rates. You know, big customers, small customers. What we typically hear is, you guys handled it the right way. You stood behind your product. You gave us what we needed in terms of changes. You learned from it, and you move forward. And we see time and time again, they say we have the best technology. They can't live without it. So I think we handled it the right way. I think customers respect us for that. And ultimately, we gained greater intimacy with those customers, and they're buying more through Falcon Flex.
Well, speaking of buying more, you announced a $1 billion buyback. I was quite surprised, frankly, and the reason I was surprised is because the stock was at its high. Why announce a buyback with the stock at its high?
Well, that's a great question, Jim. So we authorized the buyback, and we want to be opportunistic in being able to buy that back. So depending on how the stock trades, of course, you want opportunities to take advantage of that. That doesn't mean that we won't still be acquisitive, but at the end of the day, we've got tremendous cash flow. We want to have a plan in place to take advantage of these opportunities. And at the same time, we're always going to be in the market looking for innovative companies to continue to add to our growth and our innovation.
All right. Now, we got to go for some news that you revealed, which is You received some correspondence from the Justice Department, which is criminal, and the SEC, which is civil, requested information. When I say criminal, it means that there could be something wrong with the financials. I'm not talking about anything more than that I know of. But you've received additional inquiries from the government and agencies and third parties regarding the July 19th outage. This is pretty heavy stuff, George. Now, I know you can't necessarily talk about any ongoing litigation, but do you think there's a possibility that you may have to issue a restatement of your earnings?
Well, Jim, first, we stand by the accounting of these transactions. We said this before. We updated some of our disclosures around it, so there's really nothing new around that other than some updates. And as I said, when we think about July 19th, you had lots of folks asking questions. They ask questions, we respond to those, but what's most important is we stand by the accounting of these transactions.
When they ask for these, are you fighting any subpoenas, or you just said, okay, we'll send you everything we have?
Yeah, I mean, they ask a question, we answer the question. We'll tell them what we know.
Okay.
And that's how we operate.
All right, look, I think that everybody, to not ask, George, is to not do my job. I don't want anything to happen, but it's serious business because I have seen investigations of numbers, and it's not like they say, okay, that sounds good. They say, all right, well, we're going to look at it, and then a year from now, they come back to you. I mean, there is a bit of an overhang here, obviously. They're talking right now about what happened in July of last year.
Well, as you know, I mean, the government takes time to work through things. But as I said, Jim, someone asks a question, we're going to cooperate. It's an inquiry, and we'll give them the answers they need, and we'll go from there. But like I said, we stand by the accounting of those transactions.
Excellent. Okay, so Chantix, let's just talk about that for a second. You're saying we're on the cusp of the fifth industrial revolution with artificial general intelligence on the horizon. Why do we have to worry about that if we're talking about cybersecurity?
Well, when we think about autonomous agents, and Jim, you've got a lot of other guests that are working on creating these agents in various companies, which we all know and we work with. As these autonomous agents get released, they are like superhumans. They have access to data. They have access to identities. They have access to SaaS systems and workflows. And you're going to need to instrument those and protect those just like a human would. You're going to have to give visibility into these agents. You're going to have to protect them. You're going to have to be able to report compliance around them. And we think it's a massive opportunity for CrowdStrike in the future. We think about the number of humans and computers we protect. AI agents could be in the billions. And we're really going to be at the forefront of being able to protect those because that's what we do today. Both for human and non-human identities.
Are there companies in the financial sector that are interested in these, and companies, law firms, accounting? Because that's where I think that they could have the most cost saving, but they tend to be very conservative and are probably be afraid of what you just said.
Well, I think there's not a business on the planet that isn't interested in AI and ultimately saving time and money. I mean, if you can accrue these benefits to the bottom line, ultimately that's a good thing, and you can flatten the hiring curve, which a lot of businesses are looking at. So, of course, there's a lot of regulated environments. You have to be able to implement these in a safe way. You have to put guardrails around them. You have to create policy so that, sensitive data can't escape out. You got to make sure that models don't give and leak information that's sensitive to customers, et cetera. So all of that is that fifth revolution, industrial revolution that I talked about, and it needs protection. And it's a massive opportunity for us and the security market in general.
Well, look, I've got to tell you, I thought that it was a good quarter. I think that what you're talking about, Agentics, is for multiple years. We raised our price target last night for the charitable trust because we couldn't really understand what the hoopla was. But I want to thank George Kurtz, founder and CEO of CrowdStrike, for coming on Mad Money.
Thank you, Jim. Great to be here.
Absolutely. Mad Money's back in.
Coming up, Cramer takes your calls, and the sky's the limit. It's a fast-fire lightning round. Next. Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.